All right. Welcome to my very first installment of Spies Top Plays for the Day. Today is March 22nd. It is a Wednesday, and we had an important event, FOMC speaking today. So we just are going to go through the day capturing the best plays based off of a supply and demand strategy that the code basically picks out. So the code essentially, just to give you a little bit of background, this is catching supply levels and printing a red horizontal line that lets you know that the market will or should react from that level back down. And then it will give you a demand line that is green, and it would occasionally turn red whenever we break it to possibly become, anyways, that demand line is where the market should bounce from. Essentially, that's how we kind of think of supply and demand. I don't ever put it there, but just to give you an idea of when it breaks, so this became demand. Market went up to supply. This supply rejected. That's 3, 4. I mean, you can even count this one as 1, and then this is 5, right? So market came down, bounced off of demand, and then they finally broke through it with some volume and some force. Now this demand becomes supply. You get a rejection kind of when we get close to that level. It's really 403, but they get to 402, and then the market dumps some more, kind of trends to the downside. So how could we kind of capture these kind of slip move? We just draw trend channels. And I don't ever care about how accurate these things are. Just know that that's an area that you need to watch out for. Okay, so in this case, there's really no demand here, but the market ends up pivoting and bouncing back to the upside, right? And that's this move. You can create whatever reasons for it. Me, I would say we cross above this green line here that was once red. That's your 50 HMA with white candles. That means that the accumulation is happening and a potential green candle acceleration is coming. But I'm not here to really explain all that stuff, right? I'm really here to talk about SPY's best plays for today. So let's get into it. Now that you have the background, another demand zone, channels tell you how it could behave as it makes its trip to supply. And now we're going to get into SPY's best play of the day, where it gave you an opportunity to make money. All right. So how did this kind of work out? So the rules are take longs at demand zones, take shorts at supply zones. Fresh supply and demands are your best bet. And no matter what, we're going to take every single trade. Okay? So let's get to it. Market gives us a little bit of pre-market information here, so we know what's going on. At around 3:30 a.m., they established a demand zone, ended up wicking below it, coming back above it, and now price starts to make a nice grind to the upside. We got above the 50 HMA. This is a 15-minute, even though it's on a 5-minute chart, but you can see that this line is in confluence with this line on the left side. So as the market kind of grinds to the upside, after that, we also established a 15-minute demand zone at 397.40s. 397.79 was the 5-minute demand zone, and we just started grinding back up. We got above the 50, came back for one retest, and the market started going off. Came back for this retest, market went off again. This now, however, breaks that 50 HMA. But instead of trading the oscillation of a moving average line, which is that 50 HMA, today I said, you know what, I'm going to try to trade supply and demand and try to figure out how we can get in and, kind of profit from a 2-to-1 risk ratio. So rules are, if demand is down here, we're going to think about going long. We preferably like a fresh supply and demand line. But before the market even opened, we knew the levels that the market could react from. So as the market pushed down and broke the 50 HMA, it got to the bottom of the Bollinger Band and somewhat held its position. At this point, the ad started doing this. Producing, the ad is always going to be on the right side. Middle is the 5-minute, left side 15-minute. So the ad starts to do this, print green to the upside with flat bottoms, Heikenhachi, nothing crazy. It's very simple stuff. So essentially I say, all right, before this thing goes crazy, let me take longs, risking the swing low as my stop. And that's going to be your first long trade. The play is long. Why? We have a 5-minute demand line below, and your stop is the swing low, risking 2-1. Risk reward is a 2-1. So sorry, so it's maybe 1-2, right? Reward risk. So I mean, I'm not going to change that, right? So 2-1. We want to take out 2, only lose 1, right? So reward risk in this case. All right, so how do we kind of play that, right? Essentially, you need to get into a trade. Everything is not going to be as accurate as we would love it to be, but we will get into these trades, and the fresher the supply and demand, the better we would get, right? So anyways, we get into this trade at this this candle here. So your first green with a flat bottom on the ad is where I got in on a pullback. I thought this was a great entry, maybe. Who knows? They ended up coming all the way back down here, but my risk would have been here. So not a bad risk if they take out this red zone on the 5-minute. Price kind of goes up. We're green. We're red. We're green. We're red. This candle comes in, engulfing the previous one. We're back above the 50. Possible explosion can happen. Now, prior to this, we would probably get in somewhere up here. And that's not a bad thing because it's further confirmation, but I'm not trying to wait that long. So, especially when I see better reactions from these zones. Anyways, price gets up there. We get the first pop. I immediately take out one contract right here. And then we get the second pop. Once we got up here, I let this actual candle complete and had a stop somewhere below the close of that. So I really don't want them to go too far down. Although I did know that the possible pullback will probably bounce off of this line here, which is a speed line, or come all the way back down here. But I'm not going that far down after. I only want to trade that momentum. All right, we're not really going to do major pullbacks, right? Especially if we're this close to target. All right, so we didn't quite get to target, but we definitely got a nice risk reward out of that trade. So let's talk about the next trade. So this one is calling SPY shorts. Okay, why? 5-minute supply line is here. The stop is the swing high. Your stop is going to be the swing high. Once again, risking 2-1. So we draw out our zones. We have our possible, by the time, let me tell you, so like this is happening, right? Well, why are we even thinking short? Basically, this red line came in telling us that this could be a fresh supply zone that can stop this uptrend. Okay, we don't know what's going to happen. We just think that's our theory. So price stalls, gives us this undeciding candle. Next candle comes in, boom, you get an orange candle. Still don't really kind of have any conviction. This price could bounce at the money zone is what I'm thinking. Trend play. And boom, then another green comes in, taking some of this candle back. We have this line, and then boom, we have this fall. At this fall, we now have a potential short play because we have a straight divergence line. We always want it straight, right? And these are basically MACD divergences, but we're going to just say supply and demand. So we have a straight supply and demand line. It could break with different volume. We don't know if it's straight yet, but right now we're thinking about entering shorts. So we draw out our potential box. Swing high is your previous exit. Okay. 2 contracts. Let's get it. So price now does this. Down move to the money, pulls back up. I think I ended up entering for this entry, actually, not that one up there. So that would be your second best entry on this potential move away from this line here, this supply line. So we get one good candle. We have to take this green zone out. If we don't, this bounce could keep us in trap. They could take another swing for a double top. which doesn't mean we lose our coins or we stop out or anything. We stop out when they break the highs because that's a higher high. They come down. We get some cyan, cross over into the bottom of this. Now we're looking good, right? White comes back in, they get back up. Now they're fighting for this 50 HMA. You got more sellers stepping up, stopping the up move, which widgets tells you should probably get into the trade again. And this would be the best long entries that just got clapped on a potential trend entry. All right, bet. Let's keep it moving. So more sellers. We get back below the 50. Boom, your first red candle that makes this play work. However, just so you know, we already hit target on this wick. Okay, so 2-to-1 hit, that play works out. Okay, if you stayed in there though with your runner, you got way more juice because they probably are going to go touch this demand zone 397. All right, so let's see if they do it. Nothing straight yet. We're thinking longs. Here goes the straight. We take this candle right before they shoot up, right, and come back down. We are long on this. So what happens? We tap the money zone. We can't quite get through these sellers. And then boom, they come down and stop us out. Okay, we stop out. That's your first losing trade for the day after taking 2 previous trades that went 2-to-1. And right here, this risk is nothing. We got in at 397.98 and lost 397.87. Okay, not a bad trade. All right, for those that take equity trades, that's not bad. For those that are taking contracts, it's not the greatest, but you know, whatever, you took a lick. Thank God you got out. Then we hit another potential demand here where we're calling for a long play. I would say that we literally called it once we saw the second straight line, totally missing this move from 397.30s to 397.80s. Okay, maybe took a walk.
Yeah.
All right, 397.80s. So about 50 cents on that. Just pretty much couldn't capture it. 60 cents on that, couldn't capture it. And that's because, again, I want to really show you how hard it is to kind of catch these zones, catch these demand zones. But we are just taking these trades, right? All right, cool. So we either want to pull back or we're going to get in on a micro pullback in that candle. So what happens next? We get the micro pullback. We enter on that, right? 2 cons. We got to get through these sellers. That's always your target if you're basically taking the demand zone. Right? So sorry about that. Camera went crazy. So we have to get through that short money zone if we want to take out those sellers, right? And who knows if we're going to do it, but here we go. Boom. Okay, looking good. All right, we took them out. Now we have more on the 15-minute over here. Sorry, I didn't move along with the 15-minute, but we have more sellers right here at the 398 level on the 15-minute. Can we take them out? Let's see. I'm sorry. I should also be showing you what the ad did at some of these points. So really quickly, at the high here, the ad starts to come down. And based on our entry, we took maybe this candle, suffered this pullback, didn't quite make a higher high, no reason to really care about anything there. And then the sell-off happened, the bleed-off happened. So we could stay in this trade now until we see the ad give up. Little pause here, ad kept going down even though price was what you call it, like flattening out and going sideways. Finally, after making a big move from the ad there, it started tanking some more and got to a base. So why did we take this long? Well, the ad already started moving up. We got a nice little pullback, base got established, ad came in, we jumped into this trade, Ads started coming down again. All right, no big deal. And that's when we got clapped by this sell-off. All right, we didn't really get clapped because we got stopped out, but the sell-off occurred. Ad makes another base down here. We see this thing happening. We jump in somewhere around this green party, right? So what happens next is we just hope we see more green to send the move back up. So SPY 397.80s. Are we gonna take it to the moon, or at least just get this 2-to-1 trade? Let's just make sure that this is a 2-to-1. It doesn't really look like a 2-to-1. So that's your 1. And your 2-to-1 is like right here. So 398, right? So that should be your real 2-to-1, right? Somewhere up there, okay? It should be your real 2-to-1. Can we make it? Who knows? But all we can do is just take trades with great risk rewards. And let's see what happens. So the ad starts to move in a very, very aggressive way to the upside. And this is before FOMC spoke, so I don't even want to get there yet. All right, so we make it all the way up here on this ad candle, okay? All the way up there. The ad is still giving you some bottom and tails, no real flat tops, flat bottom. Bulls are still in control, even though all this grind is happening, right? Then Big Daddy JP starts to speak. All right, but so far we've taken 4 plays. We smacked on 3. We need to see what happens next. And I see the market go wheat with this big volume. So from 397, we basically make a 4R if we rode that one runner all the way up here. But we definitely took some profit on this move up. All right. And basically I think I closed it out right here. Right, I would have closed it out right there, and REIT kind of entered on that move because JP would send this whole thing down. So who wants that? Anyway, so far we smacked 4, we smacked 3 trades, lost on 1, 4 trades in. All right, let's see what happens next. Looks like we're calling some shorts based off of this divergence line. Can we hit it? Oh no. So that's not where we need to wait for this thing to get straight. Okay, so that's always like the idea. Not straight yet. We're not in. Oh, look, it's straight. So now we have to go in. We missed all of this. Okay, literally 401.76 to 400. So 401.76 to 440. It's almost like over $1, right? Like $1.30. So $1.30 to the upside in risk. So we gotta basically go $2.60, right, to like really make this kind of play work out. But all right, we drew out our 2-to-1 here. We're going back down to the bottom of demand. Let's see if we can get it. So boom, we entered the trade at like around 441, right? So boom, we entered the trade. Immediately we're green, come back, test us. It keeps bouncing off of this money zone. They cannot break this money zone. So bulls are stepping in, trying to stop this thing. Big move to the upside, but then they wick it back down. They did not stop us out because our swing high is our stop. All right, so we're still in this trade, seeing some wild, crazy volatility and price action. Boom, this guy here, 1 5-minute candle dumps the market, hits the target. We are done with this trade and out. Another banger for a 2-to-1 trade, okay? Risking a whole $1 and like 30 cents. And we went from 397 30s. That's $1, $2, almost $3. Okay, that's more of a 3-to-1 kind of trade right there. All right. Now, I don't preset these things. This is all I know is what's gonna, like, this is all I know I'm gonna lose, and this is all I know I'm trying to take. I don't really ride it all the way out to the target every time, but we definitely hit target here, right? All right, cool. Let's keep it moving. What trade do we have? I mean, I guess you could take this long, bounce to the upside, but that wick happens so fast that you're probably not gonna catch it. So you need to base it out. I'm not gonna risk this whole thing. That's too many points. Wait for another possible entry to the downside up there at supply. Um, so let's talk about this move here. So we entered somewhere around here, right, on the ad. Yeah, somewhere around here on the ad. Ad kept dumping, pause, dump, mad aggressive to the upside, mad aggressive to the downside, and that was that entire move right there that got us out of there. So we had enough sellers that started selling it here, so we just joined that herd, and the momentum kind of took us the other way. This now happened so fast that this candle just pushed all the way back up into supply in like 10, 15 minutes. We hit supply. At this point, we know that supply is legit. We're trying to get in. It starts to hesitate to go back up, down, up, down, up, down, up, down. We take our position because that's the best we can do to manage the risk. So play short Y, 5-minute supply line up there, stop, swing high. Okay, risking 2-1. So this time 2-1 trade. Let's see if we get it. Boom. 10 minutes later, we're lit. Okay. Exit the trade. You hit target, and leave a runner if you could. Boom. That thing goes another whole friggin' risk reward. So boom, they hit the bottom of demand. What are we thinking? All right, let's go long, but they broke it. All right, cool. Let's wait for another one to be established. So this is your first demand wick that tells you that the market basically could reverse. We don't know anything. We're not financial advisors. We're just kind of taking the supply and demand levels that the code is picking up, letting us basically reading price action for you. Oh, there's so much volume that stopped this downtrend. Look at that wick, yada, yada, yada. I'm going to put a line down here. All right, code, thank you for that line. Is it straight? No, not yet. Is it straight now? Yes. Okay. So at some point when this thing got straight, we had an opportunity to get in there when the price kind of came to the lows. Now remember, I always kind of want to get in somewhere within the last candle because that's going to be my stop, especially the swing low. And in this case, we have a 395.50 stop to a 397, kind of like 397, so $2 now, right? And in this case, if we did risk, this is a 1-to-1. It's coming to the end of the day. A 2-to-1 is somewhere up here, right? And this is me just eyeballing it. 2-to-1 is somewhere up there. Let's see. I think a 1-to-1 was somewhere like right over here, right? Over here. All right, so let's see. We in there, immediately profitable. Swing is coming. Oh, look at that. We hit the 1-to-1. We get a wick. Can't quite make it. Price starts coming down. You break even here if you don't take profit at that 1-to-1. We don't hit the 2-to-1. Are we going to hit? Nope. Came back down. You have a decision to make now because you're red. Why let this trade go to stop? Because that's just what we do. So you either have two options. You get this kind of momentum. You take profit out here. Your runner is showing you hesitation. Move your stop up to break even. That is a good trade. All right, that's just a good trade, and practice that because most of the time you're probably going to, go to target, and if you break even, you just break even. But if this thing goes down, you just lost that 1R, and you're basically neutral. Yeah. Sorry about that, guys. So now we have another line down here. Are we going to take it? Only if it's straight, not straight. They break through your stop. Okay, so if you didn't get out, break even, you better get out there. And this would have been your break even exit. And we also have evidence for this. Like we came back below aggressively through the 15 HMA. Basically, like kind of showing you that they rejected the money zone. Sellers came in, kind of did the same thing they did back there. And the ad also was bleeding, right? Like that was your first bleed zone. We got in somewhere up here. The first time. We come back on this pop, we got in somewhere right here, this candle. So somewhere right here. Ad goes up. You see the basin out right here. You can get the hell out of there or you can stay. That one candle didn't end until the ad gave you all this evidence. and then it was just a massive bleed off. So you didn't go in, can't take longs, can't take longs, can't take longs. And that is your SPY recap for today. We had a total of, and this is FOMC, so the swings were insane. It was absolutely bonkers. Risking 2 to 1, all based off of these supply and demand lines on a 5-minute chart. Came out the market knowing where our zones were going to be. Took the zone with some really good ideas. All right, well, we're basing out. Maybe enter the trade, make that your low. This trade wasn't the best fill, but we ended up taking that up for a 2 to 1 trade. Okay, cool. Now we're starting to get, we're starting to smoke real hookah, right? And this thing ends up basing out. We take this entry, nice little risk reward because we're doing a swing high. Market comes down, pays you your 2 to 1. All right, then so that's 2 trades so far. Third trade here fails. That's bad trade here. We get stopped out before even getting an opportunity to get out 2 to 1 or 1 to 1. Then here goes another good trade to kind of get into before the 2:30 speech. So that's 4. This is your 5th trade. We're taking this to the downside. That hits this target right here. Totally missed the up move. Get back in on some shorts up here at 402. Fresh supply zone. Hit that one. So that's 6. And then one more 7. And I would say out of these 7 trades, only this one failed to hit to hit the target. This one hit a 1.1 and might have been your style. Like, I'm not leaving until, this thing gets hit. So I would say out of 7 trades, 5 of them were guaranteed hits. And this one, if you want to call it, not really a successful trade, I wouldn't argue with you. So let's take away. So our hit ratio today, based off of this little simple strategy to play the supply and demand zone as they come up, out of 7 trades, we lost 2. It's a really good hit rate, I think, especially if you're smacking your 2 to 1 target. And as long as you risk very little, I believe that you'll have the opportunity to probably capture every single swing without fear. Like, there's no need to fear anything. It's just, it is what it is. We're getting in, we're hoping for the best, and we're risking very little. So, but if we take every one of those, and you don't even need to, like maybe the first 2 that you hit, you're like, all right, I'm done. I'm not going to risk anything else. And you just missed this entire FOMC meeting of volatility. But it's your boy Spark with your Spark in Trade recap. Best trades for Wednesday, March 22nd. Peace.